I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple to $3 trillion by 2030. So says CITI, which says any Apple car would send sales skyrocketing. That plus a clue deep within the Homepod Mini, a secret sensor. But what is it for? Plus, President Biden formulates retaliation against Russia and now China for recent cyber attacks. We'll get perspective, including just how big the hacking problem is, with the CEO of CrowdStrike, George Kurtz. And reality check. A new survey finds remote workers feel more burnout and want greater flexibility, and say their bosses are out of touch. What the repercussions could mean for corporate America. All those stories in a moment, but first, tech leading stock gains Monday. Our Kriti Gupta and Ed Ludlow have more on the market action of the day. Let's take it away.
Well, Emily, let's just kick it off macro here. Tech had a fantastic day in the markets today. You can just see in the chart behind me, the S&P 500 in the green, those tech heavyweights really helping it. And of course, we have the NASDAQ 100 as well. Even semiconductors had a really good day, and it doesn't stop there. You really had things like biotech, which of course doesn't always trade in line with those big tech names. Even that had a very good day. And of course, we know that the 10-year yield dropping a little bit didn't actually hurt tech's case. Actually, it helped it. Of course, you know that correlation is extremely important lately. I do want to zoom into the NASDAQ 100, though, and look at it on a year-to-date basis. And you can really see where we started the year and then where we are so far, excuse me. And you can see that it's actually dropped below its kind of gains for the year and then recovered not once, not twice, but 3 times. And that really brings me to this idea of what's actually driving the NASDAQ 100. Of course, we know that yields are a big part of it, but I really want to show you the correlation inside my Bloomberg terminal, really telling you, look how sensitive big tech is to those yields. And it really is extremely important. You can see that sensitivity from the NASDAQ 100 to the TIPS yield, you can see it all the way, the correlation down here at 0.42 at its most inverse, I should say, all the way back since 1997. Now, that's the macro story, Emily. I do want to get to the micro story, and for that, here's Ed Ludlow.
Yeah, looking at 2 names at the top of the tech tree, Apple and Tesla. Apple up almost 3%, best week session in around 2 weeks. Dan Ives, Wedbush analyst, a name you'll be familiar with a note out saying that the recent weakness in Apple's stock could present a buying opportunity. The other name on the move, Tesla, up 2.3%. Of course, a big call on Friday from ARK Invest and Cathie Wood saying that their bull case scenario is for a price of $3,000 a share on Tesla by around 2025. And just a quick honorary mention for NXP Semiconductor, down by 0.8%, had been higher earlier in the session, but it's its first day trading on the S&P 500. I want to put Apple and Tesla side by side and put into context their, I guess, returns so far this year, because as you can see, they've really trailed the S&P 500, both down double digits from these January highs you can see here. But now, the narrative of the market really changing. When will we see a $3 trillion market cap for these companies? And different voices participating, saying that it will happen this decade, which is kind of interesting to look out for. It can't all be green, though. One name in the red today is SVB Financial, the parent company of Silicon Valley Bank, which says it's going to issue $2 million shares of common stock, basically to fund growth, to fund its operations. You know, it's been a beneficiary of the pandemic so far. If you look at its trading activity over the last 12 months, it's been lending to those high-growth tech and healthcare companies, many of which that have found relevancy during the pandemic, but taking advantage of that run-up in its share price as well, wanting to issue stock, wanting to raise funds, and build on that growth momentum. Bloomberg Intelligence saying that's exactly what we might see, raising money, giving them growth. And that's kind of the movers that we're looking at on Monday. Emily.
All right, Ed and Kriti, thanks so much for that update. Staying focused on Apple, and much fanfare as usual, Apple releasing its upgraded HomePod Mini last fall with new features, including a home intercom system. But buyers also got something that Apple has kept a secret, a built-in sensor which measures temperature and humidity. With me now for more, Bloomberg Tech's Mark Gurman, who discovered this hidden piece of hardware. Mark, what can you tell us?
Thank you for having me, Emily. Well, I can tell you, like you said, there is that temperature and humidity sensor in there. And it's very interesting because there's so many implications for what you can do for that sensor, right? If Apple ultimately enables it in a software update down the road, the system will be able to tell how hot it is, how cold it is, what the air quality is in the room that the HomePod Mini is in. and be able to perhaps automatically control your connected thermostat. So if it's really hot in the bedroom and you have a HomePod mini in the bedroom, the temperature or the thermostat may know to lower the temperature there. If it's really, hot in a room, it may know to lower the temperature, very cold to raise the temperature. So lots of fun implications with that.
So, talk to us about the implication and what else could be unlocked with this new feature. And is this something unusual for Apple to take this more secretive route where even users and buyers don't know that there is this possibility?
It's very rare. There have been a few instances in the past, but they haven't been recent. About 13 years ago, there was an update to the iPod Touch, basically the iPhone without the phone, that had Bluetooth, but the actual Bluetooth feature wasn't enabled until about a year after the device came out via software update. I can't remember any recent history where this has happened, but it's likely a reflection where the hardware for it was ready, but perhaps the accompanying software and service to really enable it and take advantage of it is still in the oven.
Meantime, talk to us about Apple's broader strategy. Obviously, there's the device strategy, the HomePod strategy, and then there's this $3 trillion market cap target now by CITI. Talk to us about how this fits into the larger whole.
Yeah, to me personally, I don't think it really takes, a lot of math and research to call for Apple to hit 3 trillion by 2030, right? They went from 1 trillion to 2 trillion in a matter of, double-digit months, right? And now we have 9 years until 2030. And if Apple does have hits on its hands with the VR headset, the AR glasses that it really wants to begin to replace the phone with, in about 4 to 6 years from now, if they really do end up launching a car to take on Tesla by the end of the decade, there's a lot for shareholders to invest in. There's a lot of new products for consumers to buy, and there's an even larger ecosystem for Apple to lock consumers in, and they will have people continuing to spend money, whether that's on headsets, cars, glasses, all sorts of stuff down the road, not to mention all the accompanying subscription services that will go with that. So I think the future is long and very strong for Apple.
Well, speaking of a long future, let's talk about the short term. What device unveils are you expecting for later this year? Will it be the typical fall rollout for iPhones and more, as always?
Yeah, I think the next thing we're going to see is the launch of the new iPad Pros. Those are just weeks away, so you can expect an unveiling of some sort during the month of April, so not too far to wait for that. And you can expect the new iPhones to launch during their normal release cycle around September, October, alongside new Apple Watches as well. There's also going to be a new entry-level iPad at the end of this year. There's a redesigned iPad mini in the works. But I think the really big story, and I know it's not the most interesting part of Apple, but I find it fascinating, and I know you use one too. You'll see lots of new MacBooks and other new Macs across this year and into next year as well. New designs, new features to take advantage of that new M1 and upcoming M1X and M2 processors with Apple's own technologies built in.
All right, Bloomberg Tech's Mark Gurman, thank you so much, as always, for your insight and analysis. Okay, coming up, looking forward to that long-awaited Coinbase Direct listing. Well, you're going to have to wait just a little bit longer. Details on the crypto exchange's decision to push back its direct listing next. This is Bloomberg. NFTs have become the latest crypto craze for those looking for fast returns on their investments. But what is an NFT and how do they work exactly? We'll take you behind the newest art form that's invaded the cryptosphere.
This collage by digital artist Beeple was sold by Christie's early March for $69 million. Same price as this Picasso back in 2018. And so, for the first time in a 250-year history, the auction house stepped into the world of non-fungible tokens, or NFTs. Beeple has been leading the crypto art boom. His 10-second nude video of Biden and Trump went for $67,000 in October, and for $6.6 million 4 months later. A different price and a different form. The video morphed into a defeated Trump laying on the lawn, a pretty good deal for the investor known as Pablo.
I didn't know that it was going to go up in price in the manner that it did, but I was sure that this person was going to be the symbol or the leader of this movement.
NFTs are like a certificate of authenticity, proving you own the digital artwork. Just like Bitcoin, NFTs rely on the blockchain. Most of them use the cryptocurrency Ether. Unlike Bitcoin, each NFT you own is unique and attached to a specific piece of art. But the concept's application could be limitless, from concert tickets to games or even nature conservation projects. Musicians like Grimes and Kings of Leon have started selling NFTs.
For sure, the pandemic was an accelerator for anything crypto. It is a viable alternative right now to monetize your work as an artist.
The size of the NFT market is anyone's guess. Digital sports cards from NBA Top Shot alone have generated over $300 million.
I think if you look at that market more broadly, it's probably closer to about 2 billion. And, it's growing extremely rapidly. Even with super rare, we saw volumes increase 4x just from January to February.
But just like Bitcoin, there's a climate cost.
There are a lot of new emerging networks on a different system called proof of stake, and this reduces the impact by 99%.
Whether NFTs can match the Bitcoin craze is the million token question. Unless it comes back to a loftier question. What is art?
And in rare NFT news, according to Reuters, Twitter CEO and co-founder Jack Dorsey's very first tweet sold as an NFT or non-fungible token this past Sunday for the equivalent of $2.9 million in the cryptocurrency Ether. More crypto news, meantime, coming out of Coinbase. The biggest U.S. cryptocurrency exchange is now aiming to go public in April after its plans for a direct listing this month slipped. That's because it's being reviewed by the SEC. To discuss, we're joined now by Falcon X CEO Raghu Yarlagadda. Raghu, thank you so much for joining us. So as I understand it, you believe a sea change is happening in the crypto world and that mainstream acceptance is coming and here to stay. What do you want or what do you expect Falcon X's piece of the larger pie, what do you expect that piece to look like going forward?
Yeah, thanks so much for having me, Emily. At a high level, I think Falcon X, just to define that so that we understand what part of the market we play, Falcon X is a one-stop shop built specifically for institutions. We help institutions all the way from trading, credit, clearing, and custody through our partners. So essentially, I think one of the biggest transitions that's happening right now, because of a lot of traditional institutions coming to the space, is the expectation for the era of brokerages, right? No longer are they looking for simple workflows on a retail-centric exchange. They are looking for very complex institutionalized workflows like T+1 business day settlement, a leverage, till 3x, 4x leverage while having the ability to delay settle. So from that standpoint, a lot of institutions coming from the traditional world are expecting the brokerage services that they're used to. And that is one place where Falcon X as a company would love to basically play.
So you've been in the process of raising money. The valuation keeps going up. How do you want to use that money and why keep raising money?
Yeah, that's a great question. In terms of the fundraise itself, right? We want to be able to be in a position to power the growth that's happening to the industry more broadly, Emily. The first and foremost, if you look at our growth, in just a matter of 1 year, less than a year, with a team of 40, 45 people, we had to scale up our transaction volumes to about $6 billion on a monthly basis. We grew 12 times in 1 year. In terms of revenues grew by about 15 times. The last 4 to 5 months, about 100 or so institutions came to the platform. So what that means is we need infrastructure that can scale seamlessly, can provide the same level of trust and reliability. So all of that means like we need to be hiring on the engineering and the product side of things. And the second part, Emily, as a lot of institutions come in, We've been in the front and center of that. And if you look at the diversity of institutions coming in, it's growing a lot, right? It's no longer just the traditional hedge funds. A lot of corporate treasuries, public and private, are thinking. A lot of retail aggregators are thinking. A lot of neobanks are thinking. So when these customers come in, they expect a much more nuanced answer in terms of what is Bitcoin? How should I go about it? How should we get the exposure in the right way? How should we custody it? So what that means is it translates to a lot more high-touch, white-glove service in the form of customer success teams. So we're going to be using our money primarily for scaling up our engineering and product teams, and the second part on the customer success side so that customers have a good experience.
So what do you make of Coinbase's listing getting pushed back? Obviously, Coinbase going public, is being considered as this sort of moment where crypto could go mainstream, and it certainly is symbolic, but there's still scrutiny happening. Yeah. Isn't that another challenge?
I think it's actually a good thing for institutional crypto, Emily. I think first off, Coinbase listing, it's a defining moment for crypto as an industry, I think. Why? If you look at the sources of funding that are shaping the industry, it's like either selling tokens for your future cash flows or venture capital money. Now, for venture capitalists, for the first time, they saw a company that's incubated 8 years back go all the way to public market listing at $70 billion or plus. What that means is for a lot of traditional venture capitalists, it's a nice validation of what the space could mean. As a result, we're seeing a very good influx of extremely high quality money. I think that's very powerful. Now, on the second part of the question that you asked, in terms of what does it mean, institutions in general are looking for better regulatory clarity. If you look at what's going on, some of the details are not available, but having a tighter set of expectations around market data integrity, how trades are reported, all these things, the clarity around that is going to be very powerful for institutions in general for proving things like best execution. So while the delay is, it pushes the excitement off by 2, 3, 4 weeks, it's actually a welcome change for institutions in crypto. It's also supported by data. Last 2, 3 times major regulatory moves happened, institutions reacted very well, whether it's like the news around BitMEX or USDT. So likewise, we are beginning to hear good things about most of the institutions working with us. They're not very worried. In fact, they're welcoming the opportunity that regulators are looking at market data and all of this closely.
Is there any M&A interest around FalconX? Have financial institutions been shopping?
So especially over the last 6 months, yes. A lot of major banks, they're all considering the build versus buy decision, primarily because a lot of their end customers are reaching out to them in terms of understanding what crypto means to them. So yes, over the last 6 months, it's been a lot of inbound, not just from US banks and institutions, but also worldwide.
So Bitcoin now at $54,700. I've had folks tell me it's going to infinity, the moon, and beyond. Give me a more realistic number. Where do you think this is headed?
So, yeah, I mean, I've seen crazy numbers come up, but I'm not sure if all of those things are justified. But what I can definitively tell, Emily, is this time there is a much more fundamental shift than what we saw in 2017, crypto bull run. What is that fundamental shift? Especially within the backdrop of world printing a lot of money, $6 to $8 trillion at least, a lot of institutions are beginning to see Bitcoin as an inflationary hedge, especially with Paul Tudor Jones and Stanley Druckenmiller talking about it. That really brought a lot of validity to traditional institutions and traditional hedge funds. So that is one aspect. Now, the second fundamental shift that we are seeing is the tokenization of the US dollar. What is really interesting, Emily, I mean, from our standpoint, when we look at how these institutions are evolving, they all came in for Bitcoin exposure because of the inflationary hedge. After that, they started, some of them, a small portion although, started experimenting with Ethereum. Now, the third shift that we are seeing is instead of using US dollar as basically the base for these transactions, they're beginning to use USDC, which is a stable coin that's pegged to US dollar. The beauty of USDC is it's 24/7. You can work on over the weekends as well. As crypto is moving over the weekends, a lot of these traditional institutions who never had the infrastructure to trade over the weekends now are trading over the weekends and really leveraging the efficiency of USDC being there to improve the balance sheet efficiency there. So with all these fundamental shifts coming in, I'm much more stable and optimistic compared to the 2017s of the world, Emily.
You also think institutions and corporations are all going to be investing within a few years. Do you think companies like Uber, who've said, we're not investing right now, we're not speculating, and others will be eating their words? And at what point do they say, well, we're going to invest in it too, in your view?
Yeah, I mean, that's a great question. If you look at the interest of corporate treasuries coming in, we saw the first wave of them come in October, November. And a lot of them were just dipping their toes, right? I mean, yes, there is this 8% Bitcoin exposure from Tesla, but that is far and few. Most of the times we see about 1 to 2%. Now, they're very cautiously coming in, especially with the recent announcements with some major companies coming in. There's a lot more activity. I mean, we are in conversations with meaningful number of Fortune 500 companies. Now, some of them are very skeptical. They're like, yeah, I mean, Bitcoin exposure, tell us about Bitcoin, we're not sure. But what is interesting, Emily, is the most conservative of those corporate treasuries are also looking at, yeah, maybe not Bitcoin exposure, we're not ready for it, but yield generation in crypto is much, much more efficient than what you're seeing in the traditional markets. A commercial bank would potentially give you 80 to 130, 140 basis points. On the crypto side of the equation, whether it's Falcon or players like us, we're seeing about 600 to 700 basis points. And that is where even the most conservative people are jumping in.
Okay. FalconX CEO Raghu Yarlagadda, we'll have to have you back soon to see if your predictions ring true. Thank you so much for joining us. All right, coming up, the crackdown on sharing Netflix passwords heats up as CITI says Netflix is losing billions each year by yet letting it slide. We will have the story next. And as we head to break, taking a look at the markets, tech stocks rebounding as bond yields slide. We're starting to see buyers taking their first nibbles, trying to buy the dip. Apple, Tesla, Microsoft, Netflix, all rising there. This is Bloomberg. Now to a few other top tech stories we are keeping our eye on. New analysis saying that Netflix is losing out on billions of dollars a year in revenue because people sharing account passwords are sharing account passwords with each other. According to Citigroup, password sharing costs the U.S. companies about $25 billion a year. More of Bloomberg Technology after this quick break. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Let's turn now our attention to hacking. The U.S. says Microsoft is making progress closing out vulnerabilities in its Exchange servers that were at the center of a massive global hack earlier this year. The company rolling out a software fix last week, which now has been downloaded more than 25,000 times by impacted users. But one U.S. agency says there's still cause for concern. Bloomberg's Ed Ludlow has the latest. Ed, give us the scoop.
Yeah, in short, the number of companies or entities across the private and public sector that are still vulnerable to the Microsoft Exchange server hack are coming down. Around 45% of the entities that were identified as being made vulnerable have now used the patch and have kind of plugged the risk. But basically, what we're hearing from officials is that the Microsoft patch is working. It's not enough. More needs to be done. And those calls are being led in particular by the Cybersecurity and Infrastructure Security Agency Director, Brandon Wales. He was speaking at an event today, and he basically said, don't just rely on the patch. If you're an IT manager and you've been at risk, go out. Quote, more work needs to be done. We know that threat actors are using these vulnerabilities right now to compromise systems. The vulnerabilities can be scripted, allowing automated exploitation. That's just a risk that's unacceptable. You remember a lot of concern around the Microsoft hack was that it touched so many different businesses of different sizes so quickly. And by the time it was identified, there was this automation angle where it was almost passive. The code had been written, and that vulnerability through the Microsoft Exchange server could be easily accessed. And the second concern that he kind of raised is that if you are vulnerable, then you are open to further ransomware attacks. So do something about it.
So talk to us then about the latest on SolarWinds. We know now that this new Microsoft Exchange hack potentially dwarfs that one. But what is the latest that we have learned in that particular scenario?
Yeah, it's interesting. On Friday, a Swiss cybersecurity company called Prodaf revealed that they themselves had accessed the servers of one of the hacking groups involved in the SolarWinds hack. And they didn't reveal much about the identity of the hackers, but they did draw a richer picture about the kind of activity that they were undertaking. You know, tens of thousands of downloads took place through the SolarWinds software, but they only identified around 42 or 4,700 entities that were currently being targeted by this specific group. And what they said was that the group in question had a lot of characteristics that did resemble a state entity, but they did not go as far as to label them a state entity. They said that what the group was principally doing was spying on targets across the private and public sector, but also drawing data. It was everything from public sector, government bodies, IT companies, defense contractors, which is a particular concern, and audit and consulting companies where they might get access to financial data. You know, the Biden administration was pretty vocal on this last week, saying that they're going to move very quickly in addressing these, but they haven't really given much detail on how, other than to say that they are working with SolarWinds, they are working with Microsoft to kind of get a more permanent fix and critically shore up infrastructure that is susceptible to a cyber attack.
All right, Ludlow, thanks so much for that update. Sticking with cybersecurity, it's been top of mind, of course, for companies and institutions with the increase in remote work, businesses moving to the cloud, and of course, all of these latest attacks. Tech companies like CrowdStrike are seeing a surge in demand. Stock is up 280% this year and just scored a stellar earnings report on the heels of increased revenue and subscriptions. The company shows no signs of slowing down, but some critics are wondering whether this could be another pandemic-fueled success story. Joining me now for more, CrowdStrike CEO George Kurtz. George, obviously it was a huge quarter for you, and I'm sure you would push back against that narrative that this is merely a pandemic-driven success. How do you see demand keeping up post-pandemic?
Well, that's right. It really wasn't just a pandemic success. If you think about security, the bad guys are not going to go away once the pandemic is over. I mean, it's almost silly to think they're going to go away. You just talked about all these hacks that are out there. And what we're seeing is that companies are really driving forward with their digital transformation strategies. And when they transform digitally, they have to transform their security architecture as well. And we think that's a long-term sustainable trend that we're going to see into the future.
Now, CrowdStrike has been working to help mitigate the impact of this suspected China-based hack on Microsoft Exchange. What have you learned so far?
Well, as you pointed out, it is widespread. I think 250,000 customers were impacted. Microsoft customers were impacted, and we're seeing a lot of automated scanning. It's just so easy to find these servers, very easy to exploit. And from a e-crime perspective and ransomware, it's a massive problem. Obviously, you can take data off those servers, which is bad into itself. But if you can get in and encrypt those servers and try to make money and disrupt the business, that can have a massive impact to a lot of companies around the globe and government organizations as well.
Are there more, deadly details to unfold from this one? I mean, how much do we still not know?
Well, there's always more details. We only know as much as we can find out. We never, quite get in the minds of who's doing this and what they're doing. And, do you have the complete picture or not? You never know. We can only talk about what is available, for everyone to see. And that's the number of systems that are infected, how impactful this particular vulnerability was from a Microsoft perspective. And, third, how easy it is to exploit and just the mass scanning that's happening. So I think more to unfold. Hopefully, these organizations can patch these systems so they don't get nailed from these e-crime actors that are looking to make a quick buck off it. And then obviously it does really reinforce, what we do at CrowdStrike, endpoint protection, server protection, so that we can identify and prevent these sort of attacks even without the patch.
So let's move on then to SolarWinds, because CrowdStrike's also been helping there. This a Russia-based hack. I know that details with this have also been slowly emerging. What has surprised you about this particular hack, and both of these then in quick succession?
Well, I think when you look at the sunburst attack, and that's multiple parties involved in that one. Specifically, you mentioned SolarWinds, and we're helping them. It really goes to show just how patient these organizations, these nation states are really in terms of attacking these systems. The amount of care that went into identification of systems they could touch, how to place the backdoor. How to make sure there was persistence in their backdoor code, how to get it distributed, and more importantly, how to make sure others weren't able to see their activity, right? They were very targeted in what they did. It wasn't mass exploitation. It was very targeted in specific organizations they wanted to get into, including covering their infrastructure, make it look like it was coming from the US, and also user identity, which is an important element of security, trying to blend in as a normal user as opposed to an admin that's just, running around the network and pillaging the network. It was a very stealthy and very well-planned attack.
So what are the biggest nation-state hacking trends you expect to see emerge this year that we perhaps haven't seen yet?
Well, I think supply side or supply chain attacks is obviously a big one. There's a big focus on it right now. How many more are out there? It's a treasure trove of opportunity for the adversary if they can get into a supply chain. So I think that's really important. Data theft obviously is important. We've seen obviously the Chinese have been very big into stealing intellectual property and being able to commercialize that. So I do think it's a lot of the same. Unfortunately, what we're seeing though is a lot of the very sophisticated technology of breaking in the systems that have been leaked over the last, say 18 months or a couple of years, have really transcended down into the e-crime actors that maybe didn't have all of the expertise to create this technology, but they certainly know how to weaponize it and deliver it from a ransomware perspective to cause massive impact to organizations. I was talking to a company over the weekend that wasn't a CrowdStrike customer. They got hit by ransomware, and they were in the healthcare industry, and they were looking for help. And their systems are just down, right? And you're talking about life-saving, technologies and companies, and it's a massive impact. So hopefully we don't see more of that, but unfortunately that has been the trend.
All right, George Kurtz, CEO of CrowdStrike, will be watching to see how those trends pan out. Thank you so much for joining us. All right, coming up, is work from home here to stay? Microsoft just released a study that shows your boss may be out of touch with reality and that high productivity might actually be masking exhaustion. We're speaking with Microsoft Corporate Vice President Jared Spataro next. This is Bloomberg.
The pandemic has brought forward the digital transition in Europe by 7 years. And it is estimated that 20% of work hours will move permanently from office to home.
For us to go back and have every single individual coming into the office 5 days a week feels to me a little bit like a wasted opportunity.
If you can save people commute time, you have better access to talent because you're solving what people want in their personal life, it's actually going to result in a better outcome.
Coming out of this crisis, perhaps, or this pandemic, we're all going to recognize the importance of flexibility. There is real reasons why people may want to work from home. None of us, I think, will want to be constrained anymore, whether it's by the place or the time or the location even.
The bottom line is remote work is here to stay. This according to many global leaders we've spoken to over the last several months. But how companies and employees embrace it is the big question. Microsoft took a survey of roughly 30,000 global workers and found the majority feel they are struggling or just surviving in pandemic work conditions, and a large percentage are considering leaving their employer this year. Meantime, most business leaders polled said they're thriving. With me now for more, Microsoft Corporate Vice President Jared Spataro, who told Bloomberg that leaders are out of touch. Jared, welcome to the show. So my colleague Dina Bass's headline to the story about your study reads, "Clueless bosses fail to see workers are struggling, seeking exit." Why the disconnect?
Well, what a year we've had. We've tried to make ourselves students of the moment and really try and get some data to inform our position. And just as you indicated, there's a lot going on. A lot has happened over the last 12 months. So if we just look at a couple of the data points that will help us out. First off, let's take a look at that idea of bosses and how they're doing. 61% of leaders say that they are thriving right now in the current conditions. That's a full 23 percentage points above the average worker. And so we get the sense that there is really a disconnect going on. The data also indicates that employees really appreciate flexibility. Over 70% of them say that they will take advantage of flexible work policies post-pandemic. But they are really feeling a bit of a sense of burnout right now. So we just tend to think of this, Emily, as a moment for leadership. It's so important. I think it could easily be lost on leaders, and we see that in the data right now.
So there's sort of two phases here, right? Mid-pandemic, where there's still a safety risk right now. Not everyone's vaccinated. Kids aren't going to be vaccinated for a long time. And then there is post-pandemic when there isn't a safety risk at all. Let's start with mid-pandemic, like right now. When there's still a safety risk, what should employers be doing?
Well, we think it's important for every employer to take a step back for a moment and recognize the importance of the moment. As you indicated, the messy middle right now in the midst of the pandemic might be one of the hardest phases. We won't be completely remote. At the same time, we won't be all the way back into the workplace. And so we've got to deal with what we would call a hybrid reality. We think that from leaders, this demands some vision, that they've got to stand up and think about kind of essentially three things. They have to think about the policies that they're putting in place for their organizations. How do they signal to their employees that health and well-being and safety are very important and yet allow flexibility? We think they're going to have to reconfigure their space. It's very clear that we're going to have to really do things differently when we're in the workplace. And then finally, we think technology obviously will be a really important part, an ingredient into the recipe as we try to make all of this work. So our biggest recommendation is for leaders to really create a plan that has those three elements, and then to look at the data and see what it's telling us to make sure we're getting the elements right.
That term messy middle really hits the point home, but then I think about post-pandemic, which is also going to be messy because you have employers who said employees can work from home forever, employers who said we're all remote, whether you like it or not, and employers who've said the future is hybrid, as well as employers who say we want people to come back to the office. How do employers and managers negotiate that tension with employees who've now seen the benefits or experienced the benefits of remote work, as well as the costs, and then want to choose?
Well, I think the way to really think about it is if you are deliberate and have some vision, if you can see out into the future and chart a path for your organization, you can have the best of both worlds. You can have the flexibility that we've really appreciated in work from home. You can have all of the benefits that FaceTime gives you when people are together in person. However, if as a business leader, and this is the warning I would give, if you just let this thing unfold, through this current time period and into what we might call post-pandemic, then I think there's significant risk for your organization. So the biggest single thing I can tell leaders is they really need to think about investing in culture and making sure that they rethink their operating model. They're not going to be able to go back to the way it was before. So many people think there's going to be an all clear whistle that blows. Okay, we're all back to how it was. That's just not the way it's going to be. The data clearly points to that, as it's telling us that right now, people are feeling overworked. They're feeling a lot of stress. And yet at the same time, they still want this flexibility to persist. So you just have to put that together. You have to get a plan and again, lead out in a way that helps your employees understand where you're going together. If you just let it unfold, I think there is real risk.
Now, Microsoft has said employees can come back at the end of the month if they want to. And I think we're hearing a lot of employers say that right now. And employees broadly seem to feel that whatever they choose comes at a cost. If they don't show up in the office, but others are, will that impact their evaluation? How is Microsoft negotiating these tensions, as an example, having access to all of this data?
Well, that's where I go to my cultural point, where it's so important, we think, to really think very deliberately about what type of culture you're going to set up. Now, we'll start first from the policy perspective. We've already declared a couple of months ago that you could work from home up to 50% of the time. With that, we're trying to signal that we think some in-person work is valuable because of the FaceTime that you have. And then the flexibility can be extremely liberating as well. So we're trying to signal with policy kind of our position and our perspective on the issue. Then as we go back, one of the most important things from our perspective is really making sure that in the new culture, this new hybrid culture that we're creating, that we can help people to work together, whether they're in the same room or 5,000 miles apart, by using a combination of space and technology. Really what we're seeing here, I would say, Emily, is the digitization of time and space. That's what's happened over the last 12 months that I think business leaders really need to understand. And with the right technology, you really can bridge those gaps and you can bring people together in very effective ways to be creative and to produce value. For Microsoft, we're doing exactly that. We are revamping what we're doing with our space on our own campus. We continue to invest in technology. Microsoft Teams, from our perspective, is one of the greatest platforms out there. And we're trying to use that to create this organizing layer, this digital organizing layer that binds you together no matter where you are, at home, in the office, anywhere in between.
Those tools, Jared, have been so critical, and we could have this debate ongoing for hours, but we'll have to leave it there. Thank you so much for joining us and for sharing your new data with us. Jared Spataro, Microsoft Corporate Vice President. All right, coming up, AstraZeneca maintains its vaccine is safe and is looking next for emergency use approval in the United States. We'll have an update as cases rise globally. This is Bloomberg.
Based on the current data, the vaccine is highly effective and very safe. We are very confident. Many regulators are very confident that the vaccine has been approved in more than 70 countries in the world. And our next priority, of course, is also to get this vaccine approved via an emergency use authorization in the United States.
Dr. Ruud Dobber there of AstraZeneca saying the vaccine that came under scrutiny in Europe after several recipients got blood clots is safe. The company seeking emergency use authorization in the United States. It all comes amid new developments regarding COVID-19 cases globally. Germany will extend its lockdown until mid-April after contagion rates nearly doubled in a month. Chile has placed about 75% of its population under strict quarantine as new cases hover near records. And in New Jersey, the governor paused its reopening plans as the case count surges to the highest in the nation. The CDC warning Americans a spring surge could be near, telling them not to let up on social distancing and mask wearing, even though vaccinations are increasing. With more on where we are with the CDC guidelines, the vaccine rollout, and the global picture, is Bloomberg senior editor Jody Schneider. Jody, thank you so much for joining us. So give us the latest on AstraZeneca. Are we going to see it in the United States, and is it for sure safe?
Well, these numbers were better than expected, Emily. 79% efficacy rate, which means that it was 79% effective in treating cases, in preventing cases of COVID-19. In terms of the preventing severe cases, hospitalizations, and deaths, it was 100% effective. There were no deaths and there were no serious cases that came from that study. So it's a good result. The stock did well as a result today. And it looks like it will be headed for the steps needed to get that emergency use authorization, as the Pfizer, Moderna, and Johnson & Johnson vaccines have already done in the US. In Europe, there's still concerns. There's lingering concerns, even though the European drug officials, the EU drug officials, said those concerns of blood clots were overrated and that it does not have a high risk of blood clots. But still, there have been concerns in some countries that linger, and there has been vaccine hesitancy in the EU as a result.
So, Jody, let's take a listen to this warning from the CDC, which in a nutshell is, do what you're doing, don't let up. Take a listen.
Believe me, I get it. We all want to return to our everyday activities and spend time with our family, friends, and loved ones. But we must find the fortitude to hang in there for just a little bit longer.
That said, Jody, give us the broader picture. I mean, cases in New Jersey continuing to rise, New York talking about pausing reopening along the lines of New Jersey. I mean, it's terrifying.
Yeah, this has long been feared, that as people got, fatigued after a long winter and this prolonged having to, wear masks and stay inside and all that, that come spring, people would let down their guard. And even before you had herd immunity, before you had a lot of the population immunized. And that's where we are right now. We are starting to see in New York and New Jersey, after hospitalization rates had been on a continued slide, they've started to uptick slightly. We are seeing a rise in cases, and particularly a rise in those variants in Michigan and Minnesota. So this is really concerning to officials that we can't vaccinate everybody fast enough. And if the variants outpace, you could see significant resurgences. You could even see surges in different parts of the country. So they're saying, hang on for a little while longer until we can get everybody vaccinated, which will take several months.
All right. Bloomberg's Jody Schneider. Jody, thanks so much for your reporting and the reporting of your entire team. Thank you, as always, for joining us and keeping us informed. And that does it for this edition of Bloomberg Technology. We've got Daybreak Australia coming up next. I'm Emily Chang in San Francisco. This is Bloomberg.